Treasury Secretary Scott Bessent says that President Trump is now considering declaring a national housing emergency to address the affordability crisis. The median home sales price skyrocketing to nearly $420,000 last year.
All right, so if you've been following my housing market analysis since I first started warning about this bubble back in 2022, you know exactly where this is headed. The latest batch of data from July and August just dropped, and it's confirming everything I have been warning you about. This isn't just a correction anymore. We're watching the slow-motion collapse of the entire housing market, and it's gonna be really damaging for millions of American families. I've been tracking the warning signs for years now, and the numbers coming out right now are some of the most alarming I've ever seen. We're not just looking at price drops or inventory increases. We're seeing clear evidence that homeowners are in genuine financial distress, that entire regional markets are starting to implode, and that the affordability crisis has reached levels that are going to destroy the American dream for an entire generation. So buckle up, because what I'm about to show you is going to change how you think about the housing market forever. And if you're thinking about buying or selling, this information could save you from making the biggest financial mistake of your life. Listen up. Let's jump right into the most terrifying trend I'm seeing. Desperate homeowners are literally consuming their own houses to survive. And I'm not being dramatic here. The cash-out refinance data is really bad. It tells us that middle-class families are so financially stressed that they're willing to sacrifice their future just to pay today's bills. For those who don't know, a cash-out refinance is when you refinance your mortgage for more than you owe and pocket the difference. So, if you owe $250,000 but refinance for $350,000, you get that extra $100,000 in cash. Usually people do this to take advantage of lower rates while getting some money for improvements or investments. But that's not what's happening now. Fresh data shows that 64% of all refinances in Q2 2025 were cash-out deals, up from 56% at the end of last year. Nearly two-thirds of people refinancing aren't trying to save money, they're trying to extract it. And get this, these people are accepting worse terms to do it. The average cash-out borrower took a rate that's 1.45 percentage points higher than what they had, adding about $600 to their monthly payment, all to pull out an average of $94,000. Now think about that for a second. Who volunteers to pay an extra $600 every month for 30 years unless they really need that money? These aren't strategic financial moves. These are panic decisions by families who are drowning financially. The average credit score for these borrowers is 719, so we're not talking about people with bad credit. We're not talking about people with poor financial habits. No, these are solid, middle-class families who are being crushed by inflation, rising property taxes, insurance costs that have exploded 10-15% year over year, and wages that aren't keeping up with the cost of living. Now, what are they using this money for? Any guesses? The official reasons are debt consolidation, home improvements, and major purchases. But let's translate that. They're taking unsecured credit card debt and tying it to their house. They can't afford to maintain their properties without borrowing against them, and they're using home equity to buy things they can't afford. When they inevitably can't make these higher payments, they won't just get bad credit. Yep, they'll lose their homes. And it gets worse. The FHFA reports that available equity to tap has already dropped 5% in a quarter of all U.S. markets. So even as families desperately try to extract money from their homes, the well is running dry. These people are running out of options fast. All of this financial desperation is happening as home prices finally start to crack. National median listing prices hit $429,990 in August and went completely flat. After years of relentless increases, growth has stopped dead. But the regional data is where you see the real carnage starting. The Case-Shiller Index for major cities dropped 0.3% in just 1 month, and that's the first negative reading in years. This is being driven by demand destruction in the South and West, where prices peaked during the pandemic mania. Even Zillow is now predicting a 0.9% national price decline by year-end. When Zillow starts forecasting price drops, you know something fundamental is broken. In specific markets, the collapse is already underway. 19 of the 50 largest metros are seeing year-over-year price declines of 1 to 3%. Places like Austin, Phoenix, that were poster children for pandemic price growth, are now leading the decline. 27% of active listings have had price cuts. More than 1 in 4 sellers have been forced to slash their asking prices because buyers simply won't pay inflated prices anymore. Now, here's something that's never happened before. New homes are now cheaper than existing ones. Can you believe that? New construction sold for a median of $403,800 in July, while existing homes were $432,000. Well, that's completely backwards, and signals that builders are panicking and dumping inventory at any price. Meanwhile, this so-called housing shortage narrative has completely collapsed. Active inventory jumped 25% year-over-year to 1.1 million units nationally. The South saw listings surge 45%, the West 35%. We've returned to or exceeded pre-pandemic inventory levels in 12 states. New home inventory hit a 16-year high of almost 500,000 unsold units. If there was really a shortage, these houses would be gone instantly. Instead, they're sitting because nobody can afford them at the current prices. The truth is, there are 15 million vacant homes in America right now. 15 million. There was never a supply shortage. There was a pricing problem that made homes unaffordable for normal people. Buyer demand has completely evaporated. Pending home sales dropped 0.4% in July, following a 0.8% drop in June. We're at 30-year lows for sales activity. Contract cancellations hit 15.5%. That's the highest rate ever recorded. More than 1 in 7 people who agreed to buy a house are walking away from the deal. This demand destruction is creating some really dangerous situations. The number of homeowners who owe more than their house is worth jumped to 2.8% nationally, affecting 564,000 properties. That's over 500,000 families who are trapped. They can't sell without taking massive losses. This is concentrated in pandemic boom areas like Austin and Cape Coral, where 5 to 7% of homeowners are underwater. These are mostly people who bought at peak times with low down payments and now watching their equity evaporate while their costs skyrocket. Foreclosure activity is already ramping up, filings up 7 to 13% year over year. States like Nevada, Florida, and Maryland seeing 20 to 30% increases. This is being driven by the end of pandemic protections, adjustable rate resets, and families simply running out of money. But here's the statistic that should keep everyone awake at night. Ready for this? 57% of American households, that's 76 million families, cannot afford a median-priced $300,000 home. 57%. You see, you need to earn $126,700 per year to afford that median price $300,000 home, most families don't make anywhere close to that. Half of all renters are spending more than they should on housing. You need to earn over $33 per hour just to afford a basic 2-bedroom apartment, more than 4 times the minimum wage. When more than half the population is locked out of homeownership and half of renters are struggling just to keep roofs over their heads, you don't have a housing market, you have a complete systemic failure. So what does all this mean? It means we're watching the controlled demolition of the American housing market. Desperate homeowners are liquidating their equity simply to survive. Prices are collapsing in major markets. Inventory is flooding back as sellers panic. Buyers are walking away from deals en masse. Foreclosures are ramping up, and more than half the population is completely priced out. This is not a soft landing or a healthy correction. This is the beginning of a housing market collapse that's going to wipe out the wealth of millions of families and reshape the American economy for decades. The data does not lie, and the trends are accelerating. We're past the point of no return, and the next phase is going to be brutal. Let me know what you're seeing in your local markets in the comments. Now, if this video helped you understand what's really happening, please smash that subscribe button, because I'll be tracking every twist and turn of this collapse as it unfolds. And please check out my previous video where I broke down how real estate agents are manipulating statistics to hide the truth. It'll absolutely blow your mind. Thanks very much for watching. I'll see you in the next one.